So earlier this week, we saw an announcement that Warren Buffett took a stake in Capital One to the tune of $1 billion. For me, it was a surprise over the last 18 to 24 months. Uh, Warren has been downsizing his bank holdings, which included Ally Financial, uh, Bank of New York Mellon, and U.S. Bancorp. Now, we've seen regional banks sell off uh, during their Berkshire Hathaway annual meeting. They announced that they had over $130 billion in cash. People were asking what are they going to do with all that cash. During the Great Recession, we saw um, Warren take advantage of the opportunity when he created great deals for him and for those companies. Goldman Sachs and Bank of America were kind of hurting, um, and they paid off handsomely for Warren. So, uh, being that we didn't see him take any action this time around, maybe the banking crisis was really a crisis. Nevertheless, he announced that he took a stake in Capital One. So let's get into the video.
Capital One rallying after filings showed that Warren Buffett's Berkshire Hathaway took a nearly $1 billion stake in the company, buying 2.6% of the shares in the first quarter. This as Buffett dumped shares in Bank of New York Mellon and U.S. Bancorp. Now, this is something he had sort of talked about that he was doing here. My caveat or my disclaimer, whenever we talk about 13F filings, they are a snapshot of one day. Now, Warren Buffett, as we know, tends to buy and hold stakes, but we also don't know what's on the other side of the equation. Right. Is he shorting? Is he hedging? Are there things he is not disclosing? So it doesn't give us necessarily a full picture of what's going on, but it does give us a little bit of an insight into what he is doing.
Yeah, we even as our discussions ahead of the show, it was pointed out by our team that, this is also one of the largest lenders on a financial basis for auto purchases. Auto purchases here, especially for Warren Buffett's Berkshire Hathaway, they have already taken another stake. Last year, they took a stake in Ally Financial, and that one of the other large player in autos. So within that kind of lending capacity, it'd be interesting to see where they perhaps are looking across the automotive landscape and where for some of the loans that both Capital One and Ally Financial, where that is appetizing for them to add on to their portfolio right now.
Yeah, I want to bring Katie Kaminsky back into this discussion because I think the regional bank discussion is still so interesting. Is that an area where you're looking at either banks broadly, regional banks specifically? Because it feels like there are a lot of headwinds still to come in this group.
Yes. I mean, I think this comes back. What I love that you're talking about Buffett here right now is he's a value investor. So they're looking at companies where they see value over the long term. And we got to remember they were very successful back in 2008 and sifting through the rummage in a very extreme financial environment. But what's interesting now is really the fixed income angle of this and which of these banks are the best positioned to deal with a very different rate environment, either inverted curve or as we see yields might be moving and we see capital rolling over and people trying to refinance it. I think that's where the interesting opportunities come in the space is figuring out which banks are going to be better positioned to move as sort of capital costs have changed significantly. Going through sort of this tightening cycle that we've been through right now. And we've already seen that there's trouble in the waters with what happened earlier this year. And so the question is going to be which other banks are better positioned to move with this situation and which of them are going to have more challenges because perhaps they're in an area, like you said, autos that is better or another area which is going to have more challenges.
So why Capital One? Right. We just got a report that credit card business, U.S. credit card debt hit a record of $930 billion, an increase of 17% from a year ago, with younger Americans having the highest delinquency rate. So why would he invest in Capital One? Capital One is a credit card company? Well, listen to this. Yes, 1 billion may sound a lot, but it's only 0.3% of the Berkshire Hathaway portfolio. Now, Capital One has a low valuation, roughly a zero point 0.7 times book to value, and 6.7 times forward earnings. And, you know, despite potential delinquencies, Capital One has plenty of cash for loan loss reserves. Um, so, with that said, let's look at the charts of Capital One. This is the monthly chart. And I don't know. I don't see anything too special here. Um, that is the 4 o'clock stock market bell. All right, so let's do this. This is the '06 highs. All right, and that is $90. Pandemic lows. These were the highs. I'm gonna put a 150 as a longer term target. Price has to deal with the most recent pivot high. So let's just put a solid line there. Price appears to have found buyers. So why is he buying now? Maybe price is selling at a discount. Maybe this level is being defended by buyers over the last, really since last September. All right, let's go to the weekly chart. Here's that pivot high that I was referring to. Okay. I'm gonna put a band. Okay. Now price is making lower lows within this band. But it's respecting that band. All right, here's the level that price needs to get past. The $100 level, even. Why? Well, we got support, resistance, resistance. $100 is a round hole psychological number. This was probably on the announcement that Buffett took a stake. The sell-off is probably just folks taking in profits from the week. We can get past 100. There are no sellers in this red extended range candle. So 110 would be a medium term target. Let's do a dotted line. All right. So again, did he pick the right time to buy? Timing seems right. This $90 level is being defended by buyers. Confirmation that price is going to continue to increase. You get a close on a weekly candle above 90, above 100. You do that. You look for 110 to be your next level. Longer term, look for 125 to be your next level. Let's just go to the daily chart to see how we close for the week. All right, so this had to be the announcement. This is Monday, Tuesday. So when he announced the stake, we had a gap higher, but then a sell-off, right? Okay, profit taken, but the momentum is clearly to the upside. We do have the formation of a reversal pattern. If you can see this W pattern here, right? Again, you break this level, which happens to be the apex of this W. You're definitely moving higher. All right. You have some sideways price action at the 110 level. Price is at least going to pause there, right? Because there was a lot of selling between buyers and sellers at that level, right? So it's a gravity for price. So why did he buy? Well, we won't know, but from a technical standpoint, it was a good area to buy. Thanks for watching. Subscribe. Please like the video.